I'm here with Dean Fraser, founder of Brickfloor. Dean, welcome to the Inside Network's Income and Defensive Assets Symposium.
Thanks for having me, Tahn. Great to be here.
For advisors that are new to the name of Brickfloor, could you give a quick summary of your story and the space you operate in?
Yeah, sure. So Brickfloor is a residential property-focused funds manager. So we're focused on building a large-scale platform from established blue-chip Australian properties. So not new build, not apartments, but established residential property. My background is I started my corporate career as a lawyer and then moved into investment banking. And it was through those experiences that we ended up seeing some core problems in the market that we then would look to solve through both our property fund and our core home origination model.
Can you speak a little bit more about that gap in the market that you identified and how you went about building a solution?
Yeah, sure. So there were two things. One is what we saw was that in Australia, the power of underwriting for a company, so to give certainty of sale price, sale outcome, and the amount of capital raised was super important and popular in the Australian landscape. So giving certainty to companies that were trying to raise capital is a large part of the capital raising landscape. We thought that certainty of outcome also applied to different markets, one being residential property. So as you may well be aware, if you've looked to sell a home before, selling a home can be one of life's most stressful events. So to be able to give certainty to a home seller in the home sale journey was a core problem that we thought needed to be solved on one hand. The other problem we saw in the market was that a lot of people have built an extraordinary amount of wealth out of residential property, but it's very difficult to access in a diversified way. There's high barriers to entry, there's high cost to acquiring a home or an investment property, as we all know. So we felt like there needed to be a fairer way or a better way for people to get exposure to the residential property market through a fund and through a high-performing residential property fund that's basically built through our market price guarantee product, which is the product that provides certainty to home sellers that we've built.
Okay, following on from that, what does the risk management process look like?
So risk management is obviously paramount for any fund manager. So in our particular case, we have both sort of general risk management systems and processes that most fund managers I expect would have. And we also have very specific ones that relate more to our business, which are probably more of relevance and more interesting for this question. So in particular, a core risk for our model is market price risk. So does the residential property market go up or down, and how do we feel that upwards and downwards movement? And also the quality of asset that we're buying, so asset selection risk. So in terms of asset selection, we have quite a detailed process around what types of homes we will look to buy into our fund through our market price guarantee product, where we feel that those attributes that we're looking for in homes are more likely to generate stronger rates of capital growth. And we've determined that based on a lot of data analytics work, so looking at 30 years plus of data to try to identify what particular home types, home features, home locations have the high propensity for capital growth based on historical data. So we look to really sort of target particular types of homes. We then do two different levels of valuation on a home. So we do our own internal valuation on a home before we make an offer. And we also then support that through an external valuation by an independent valuation firm who looks at the price that we're offering for that home effectively. Lastly, we do a building and pest inspection report. So we make sure that every home that we're putting an offer out on through our market price guarantee product doesn't have any sort of major faults or defects. So that's kind of asset selection risk and how we manage that piece. Market risk is another area of strong interest for us. Obviously, we're exposed to the residential property market, and we want to have that type of risk. Obviously, the preference is for it to be positive risk in terms of price appreciation of the market. But we have some inbuilt mechanisms in our model whereby effectively our market price guarantee guarantees a floor price for a home seller. So we're buying homes at conservative prices when we buy the home. We're also charging a fee to the home seller that provides us with a buffer in the event that we were paying overs for a property, which we don't think that we do. We've got inbuilt mechanisms where we're buying at sort of conservative market prices plus generating a fee income that really helps us defend against price softness in the residential property market. But ultimately, having a diversified strategy around property and Australian properties across Australia is really our key way of actually making sure that we are not overexposed to any one market, and that we're not going to be penalised for being having too much focus in any one particular segment of the market.
Certainly a fascinating model, Dean.
Thank you.
What do you see as the most interesting market trend evolving in the next 12 months?
I think for residential property, there's a really interesting time with some really strong tailwinds for the market in terms of population growth. There is a lack of supply of housing in Australia, which is not going to go away quickly. So there's this upward pressure on property prices, in particular established dwellings, we feel. So we can see that the construction costs of new build have gone up very high. So an equivalent property that's established is now having upward price pressure on that property to approximate the price point of that newly built home, given that newly built home now is costing more to build. So there's some really strong tailwinds for residential property, and we think it's a really strong and safe way to preserve and grow wealth through an asset-backed asset class.
Brilliant. Dean Fraser, thanks for joining us.
Pleasure. Thanks for having me.